Welcome back to Primary Source China Investment. This is show Z3, which means we're at the end of season 3. So look forward to season 4, which will begin next week. But for this week, we're talking about commodities in China priced in renminbi. And it's been a few months since we talked about commodities, but like most things in China, everything's changed. Recall two of the many themes out of Beijing that we've talked about on this show is energy and food security. So the pandemic and the Russian invasion were two exogenous events which caused a more fervent focus on these two areas. So let's take a look at some key commodities and what's been happening with their pricing. And the first up is wheat. So it was very steady until about April or May, until the spring season. And then you see a pretty violent spike up. So about 20% increase year to date.
This year, energy is the theme in the market. Because energy is the base of the commodities. A lot of the commodity, their transportation, their price include the energy. The shortage of the agricultural product and also push the price go too high. Right. So China has like the wheat, probably not rely on the import too much. But for like the soybeans and other international product like the copper or something, they are more easily affected by the international market.
Let's slow down. So next up is soybean meal, which has been up 45% year to date. Exactly what you're talking about. That's more of a global market, and China does import a lot more soybean.
That's right. And also China government, they have the control for the big commodity price, wheat and soybeans. So they try to build a national reserve. So if the price get a peak and they probably sold it, and at the bottom, they probably buy it. So they try to balance the volatility in the market.
Yeah, in the U.S., the U.S. government is releasing the oil reserves, and in China, they're releasing the pork reserves.
That's right. Yeah.
If you look at pork prices year to date in China, up more than 100%. So that's a massive move up. So that's why they're
and also China is pay close attention to the CPI. Pork price is like the bigger component in the CPI. So they definitely affect the entire society. But the problem is too many speculation force in the market. So they can easily push the price up and the price down. Otherwise, I bet the entire downstream guys, even in the industry guys, they cannot suffer the high volatility.
Yeah, well, you have speculators in the market too.
And most of the regular producers have no capability at all. They really get hurt.
Yeah,
that's really hurt the entire sectors in the long run.
Right.
But overall structure, if you see the China, it's still the many small producers. So efficiency probably low and compared to the larger producer, and obviously the cost is high.
Let's pivot from the agricultural to the more energy related that you mentioned earlier. So heating season is here. Well, absolutely in New York, heating season's here, but most home heating is still via thermal coke, well, the coal in China. And you can see that's up recently about 20%. And that's going to have a huge impact. We're going to get to CPI numbers in a minute, but you see thermal coke is up. Fuel oil, which is actually used a lot less, is relatively flat this year. Fuel oil is used in about 20% of homes. So that's been basically flat. But interesting that headline inflation, China has been spared. Prices have not been up so much, although recently CPI just printed a huge number, largely related to food. If you look at the food element to CPI, food was up 8.8 year to date. And as you said earlier, pork is a huge number. That was 36% up, CPI for food 8.8. But what was not up, which is helping China, is housing. As we talked about last week, property prices are coming down. So housing prices are coming down. So there's this push and pull for CPI in China.
In China, like the coal, it's much more important than the crude oil. We calculate the annual consumptions. We probably have the new number pretty soon. Annual consumptions of the coal is pretty much similar or maybe higher than the crude oil. So they consume almost 3 billion tons of the coals every year. That is why the China pushing the new clean energy strategies and try to reduce the fossil-related product with that. It makes some progress, but you see the percentage is still small. So because of the better relationship with Australia, they cannot import too much of the coal. Other coal from other countries, that like the quality is a little bit not like the Australia's coal. So right now, I think the energy is still the key factors to impact the entire society.
Yeah. So there was some commentary that CPI number continues to stay within a reasonable level because COVID shutdowns prevent people from going out and consuming. So you have this push-pull on a number of elements in the economy. So I did want to end with two sectors on the equity side. So we do talk about investment. So I did want to talk about investment here. So the energy sector and the agricultural sector, how did they perform? A few weeks ago, we covered this on sector analysis throughout, but just wanted to highlight that the energy sector is up, the only sector that's up year to date, about 13%. And the agricultural sector actually outperformed the CSI 300. So it's down, but only down about half of what the CSI 300 is down. And if you remember, a lot of the names in the energy sector are these big, large SOEs related to refining, coal, coking companies, oil companies, those kind of things. We'll put a list of the top names up there. And the agricultural sector has a variety of companies that are in different industries in the food value chain, and some all the way from the farmer all the way up to the producer. So there's a mixture of companies in that agricultural index.
So that really means that you can easily know what's going on in the market. Whoever dropped much less than others, that really means a good sector.
Yeah, that's so-called alpha.
That's true. That's called a sector rotation.
Absolutely.
Yeah.
So, going forward, where do you think energy is still a place to be, or agriculture is still a place to be?
I think the energy sector is probably related to another big theme, like the dollars, the big cycle. So that's also impact all the commodity and the sector's price. So those two big of things. Generally in China, I think it should be a little bit flat. But overall, the demand and consumption, I think the government still do the great job. So I would expect a relative stable market in the energy sector, but I don't think it will get dropped significantly.
I'll take a contrarian view on inflation. I think inflation is going to spike in China just because of a lot of these inputs continue to go up.
That's true, yeah. And then you probably see that China just reduced the interest rate. I think the last Friday, they down a little bit, and also Federal Reserve and also softened their stance. So that's all those big things in the market.
Yeah, there's a lot of variables. So we're gonna leave it with show Z3 this week. Thanks for tuning in, and look forward to our new season next week.
Thank you.